So unfortunately, I don't have a crystal ball. Been saying that all year. I wish I did, because if I had a crystal ball, I definitely wouldn't be making this video right now. I'd probably be doing something pretty crazy, making a lot of money doing something else. But here I am, talking to you and giving you my perception of what the heck is going on in the market and how long it can actually last. So honestly, the big question on everyone's minds, if you're buying a home, you're selling a home, or you're just a real estate professional, is how long can this current real estate market last? You know, how long can what we're seeing in the market continue before there's a turning point, before we hit that precipice where things just have to change? Because at the rate they're going right now, there's just no possible way that is sustainable. That's the big question. And I'm gonna go over some data with you guys to give you an idea of what I think is going to happen in the next 6 to 12 months. So the first thing I want to talk about is the inventory, which is one of the biggest reasons why we are currently in a seller's market. We have a shortage of inventory. We have had a shortage of inventory for a very long time. For some reason, it feels like it's been like this for years. I know it's only been months, but the effects of having such low inventory has just been a drag on so many real estate professionals. And it's really frustrating. Buyers, you know this all too well, how there's just not nearly enough homes on the market to meet the buyer demand. So everybody is frustrated on that end, and I get it. Where I'm at in Chester County, there are 762 homes as of recording this that are on the market or coming soon on the market. That's not a lot. In Delaware County, it's like 600, which is really bad because Delaware County is similar size to Chester County, maybe even a little bigger. And then in Montgomery County, there's a little over 1,000, which is great, right? It's great to see some homes coming back on the market, but that's still not that much. It's still like 30 or 40% of where we should be in a healthy market. And this is what's really driving what we're seeing with the crazy bidding wars and the over asking price and waiving all the inspections and waiving all kinds of contingencies, is because buyers really want to get into a home. And there's just not enough homes to supply their demand, which is extremely frustrating. I want to share with you a quote from Sam Qatar, who is the Vice President and Chief Economist with Freddie Mac, specifically the Economic Housing and Research Division. Sam said, "The main driver of the housing shortfall has been the long-term decline in the construction of single-family homes. That decline has resulted in the decrease in supply of entry-level single-family homes or starter homes." So that's a big part of the inventory issue. The supply issue is they're not building enough new construction homes to keep up with the demand also. There's also another important piece of data that I want to share with you from the National Association of Realtors. So according to the latest data released by the National Association of Realtors, existing home sales declined for the third straight month in April. This decline is a result of low inventory and swiftly rising prices. The supply of homes for sale at the end of April was down 20.5% from 1 year ago. There were 1.16 million homes for sale, representing a 2.4 month supply at current sales pace. 2.4 month supply. Just to give you reference, we should be at about 5 or 6% in a healthy market. So this is nationwide. We're seeing this. You know, when I'm local to Chester County, and I like to speak about Chester County in Pennsylvania, but 2.4 months of active inventory nationwide? It's a huge housing shortage crisis. But there is some hope, and I want to share this with you. 43% of the economists at Pulseonomics surveyed said that the US housing market will grow in the second half of the year when folks feel more confident about going out and maybe having people in their homes. Here, more people are going to feel comfortable as they become vaccinated and put their homes on the market, which will add to the current lack of inventory. So I had mentioned new construction and the lack of building, and I want to talk about that now. We have not, and when I say we, I mean the US has not been able to keep up with the demand for new construction homes from the housing crisis in 2009, as you can see on this graph. So if you look at the graph, single family housing units completed by decade, from 1970 to 79, 11 million, 80 to 89, 9.8 million, a slight decrease, and then it increased again in the 90s to 10.7 million, and then you can see in the beginning of 2000s it was 12.6 million, and then the housing crash happened, and from 2010 to 2019, 6.5 million. That's half. That's half the number of new homes that have been built in the first decade of the 2000s, which is showing you how much of a shortage there actually is. And I know people always get up in arms about new construction coming into the area, you know, especially in this area. If any new builder comes in, buys a parcel of land and tries to build there, you know, there's always going to be pushback. But the fact is, the population of the US is growing so rapidly. The millennials are the largest buying generation ever. And they're buying homes right now, and there's not enough. So we have to build more single family homes, and at that, we have to build more single family homes that are affordable, because some of the single family homes that they're building, Downingtown, Westchester, Great Valley, these places in Chester Springs, they're not that affordable, right? So we have to figure out a way, the builders have to figure out a way to try and build affordable single family homes to keep up with the demand. I read a very interesting article this morning that went into a little more depth as to what is happening in the new construction atmosphere, and I wanted to share it with you. So this quote is from Dan Durden, who is the CEO of the Pennsylvania Builders Association. And this was the most telling thing that I heard. Dan said, "It is not just that prices are going up, it's how quickly they are going up, and nothing's coming down. And it's not just the case that the item, particularly lumber, is so high, but it's that you can't get it, no matter what you're willing to pay. There's glass, there's cement, there's anything of aluminum, there's anything made of steel. We can't get drywall at a decent price. Copper products, pipe, everything's through the roof. Lumber's gone through the roof, but everything else has gone up faster than the rate of inflation." Faster than the rate of inflation? Like, that's pretty scary. The fact that all these prime building products, what you need to build homes, is drastically increasing, and there's just no way to keep up with that demand. And that means as the cost of prices increase for building materials, that means your house price is increasing too. Another thing that Dan mentioned is there's also a shortage of skilled laborers. And this is something that's not new. This has been going on for a long time. The article goes on to say that most of the shortages are due to the pandemic, but not all. Lumber and laborers dates back to the 2009 crash, where lumber yards had an oversupply of both. So they had an oversupply of material and laborers, and then, as you know, laborers had to get laid off. They stopped building at the rate that they were building, and they just had an oversupply of both. And ever since then, it really messed up the market. So we have all these different things that are feeding into the reason why new construction is not able to keep pace, unfortunately. Another thing that we have to focus on is the increase in home prices. They're still going up fairly dramatically. Year over year, they have increased almost 10% in Chester County. In some areas, I know there's an area in Wayne County, Pennsylvania, where my wife and I are currently buying a home as a investment property. They have gone up 19%, and that is not sustainable at all. I do personally believe that we will reach a critical mass, because what is happening is, with the increase of these home prices, it is putting first-time homebuyers out of the market. And you can't put first-time homebuyers out of the market for too long before something has to change. So we're going to get a point where it's not increasing in double digits, and it's back to somewhat normal of single digits. This is a graph that I want to share with you that gives you an insight into how much sellers have increased their profits from the first quarter of 2020 to the first quarter of 2021. So as you can see, the average profit for sellers increased from $55,750 in Q1 of 2020 to $70,050 in Q1 of 2021, which is a 26% increase. That's pretty staggering to see in just a year's worth of time. and this is not something that will continue to happen. Prices will reach a ceiling and they can't just continue to go up at this rate forever. So for sellers, if you're thinking about selling, now is definitely the best time to do so. If you're thinking, I'll just wait until next year, you might not be able to maximize on your home's value like you would right now. And for buyers, this is good information because you should know that home prices aren't going to continue to skyrocket. The second to last point that I want to touch on is the mortgage forbearance. One important indicator for what the housing market is going to do that a lot of people have been focusing on is mortgage forbearance, especially since the mortgage forbearance program started in May of last year due to the pandemic. This is what a lot of real estate experts were, jumping on YouTube and saying, hey, the market's going to crash. 4.9 million people are in forbearance and all those properties are going to get foreclosed on. It's going to be a flood of REOs. It's just going to be like 2009. But as you're going to see, and I'm going to show you the data, that's not true. And this is what's actually happening in the mortgage forbearance program process. The number of homes in forbearance has been unchanged for the past 3 weeks, as you can see. And in addition to that, 400 people have left forbearance altogether. So let's focus on the number of unchanged people in the past 3 weeks. That's a good sign. That is showing that more people are either leaving the program or they're staying the course trying to figure out, but it's not increasing. So the fact that it's staying stagnant and not increasing is a good sign, because that means that more people are hopefully getting back to work and they're able to keep up with their current mortgage payment. And then 400,000 mortgage left forbearance in the last 2 months. That's a great sign too, because that means that and I'm going to show you what I'm talking about, that means that they're moving forward, and usually it's a good outcome. Although there are still people that are not in a good position. Okay, so what have people been doing as they have left the mortgage forbearance program? Take a look at this chart. So upon exit from forbearance plan, 47.3% were paid in full. 47.3%, that's almost half. 36.5% worked out a repayment program. So now we're more than 3/4 of the people that were in the program that have left so far year to date. 16.2% were still in trouble. So 16.2% were still in a position where, these might be the homes that get foreclosed on that come to the market as REO properties, unfortunately. I want to share this very interesting quote that I heard from Rick Sharga, who is the executive vice president of REALTOR. He said the following about the forbearance program. I think the math speaks for itself for how well the forbearance program has worked. And it is one of the few times in my career that I have seen a government-initiated program adopted and executed as well by the industry as one. That's pretty powerful to hear that from an exec that's as high up as Rick, that has been around, has seen what happened in the crash, and is stating that this government initiative has actually been working. So what they decided to do last year with the forbearance program, it has actually been successful, which is a huge positive for those people that were potentially looking at losing their homes. And the last thing I want to talk about today is interest rates, because that's a big question on a lot of buyers' minds, a lot of lenders' minds. What is going to happen with interest rates? Are they going to go up a point or 2 points, 4%, 5%? I don't think so, and I don't think so because I've been reading up on it, and this is what I have seen. So as we look at interest rates, this chart shows you from January of 2020 to today. So where we started at the beginning of 2020 was a little above 3.7%. And then you can see the drop and the spike, and then the drastic drop from the time around where the pandemic happened until today. So right now, we're sitting just below 3% for a 30-year fixed rate. That's pretty stinking good. That is really good, in my opinion, to get a rate that is at or below 3% still. So if you're buying a home, just know that the interest rates are still in your favor. Even if they went up to where they were in the beginning of 2020 at 3.75, that's still really cheap to borrow money to get a home. But here's what happens. The higher the interest rate goes, the less demand there will be from buyers, which will start to slow the crazy market. So if the Feds want to continue to increase the interest rates, then hopefully that will have the effect where it slows the buyer demand down a little bit and make it a little less competitive than what it is. So I want to share with you the mortgage rate predictions from 4 of the largest real estate companies, which are Freddie Mac, Fannie Mae, MBA, and NAR. So as you can see, for the third quarter of 21, all 4 have an average of about 3.35%. So looking at that, you can almost estimate that it's going to go up about 3.3%. In 2021, the fourth quarter, towards the end of the year, 3.4%, and then it's gradually going to increase in the first and second quarter of 2022. Again, it's still pretty dang low to get 3.6%, even if it went a little higher. So don't fret too much if you're a buyer. You're still going to be able to get a good rate, and it's going to be less expensive to afford a home. But this is where the fact that comes in that if home prices keep rising, it's going to cost more. So what does this all mean for you? This current real estate market, unfortunately for sellers, it can't last forever. Fortunately for buyers and all our real estate professionals who are like pulling their hair out trying to figure out what the heck is going on, it's not going to last. So breathe, take your time. You know, if you don't have to move, then you probably shouldn't. But if you really want to take advantage of these low rates, then it's a good opportunity to do so. Sellers, if you want to sell your home, if you have somewhere to go already, if it's not going to be a situation where you have to have a lease back or whatever your plans are, if you have somewhere solid to go, definitely sell. It's a great time to sell. If you want to learn more about how we can help you buy or sell your home in Chester County or the surrounding area, or if you need help throughout the country, throughout the state of Pennsylvania, just do me a favor. Reach out to us anytime. You can click the link below and drop your information or text 484-999-0218. Look forward to speaking with you soon and have an awesome day. Take care.